Hey, and welcome back to a new video. Today I want to show you how to analyze past price action, how to know if a breakout is successful or not, how to stay in a trade, when to find signs that a trade is losing momentum, and this we will only do by using technical tools like support and resistance, trend lines, and supply and demand. So first of all, this is a very messy chart. You see that we have two ranges just on top of each other. The first one here, where price stayed in this range, then we moved higher, but just traded in a new range here, and there was not a lot going on, and was very hard to tell whether price is going to go up or down. And there are a few hints that we could have used to understand what was going on here and to position ourselves. So first of all, whenever I see this, I try to draw trend lines and try to use support and resistance. So I look for areas that stand out. I would start here by this with this high. Then you can see this high here. Then when we extend it a bit further, we can see that the next time we moved into this area, we even had a gap above it, which is a strong signal. Then when we move forward, you can see price tried to break it to the downside, but got rejected with a fake breakout. Then here again and here again. So this is an important area to have on your charts. And like I mentioned in a previous video, that I prefer to use support and resistance zone instead of just single lines, because price is often not that clear, and using just a single line, we are often missing out a lot of action. So we would use a zone. I draw this with a rectangle, and then I look for ways to capture as much price information as possible while leaving the zone as narrow as possible as well. Because it's not going to help us if we just create a massive zone where we then don't understand anything that is happening, and it's just confusing us with our trading. So this would make sense to draw our zone like this. We can see the wicks fall into this area. Here as well, the rejection. Here, this short consolidation as well. The fake breakout just barely leaves the zone. And then this would probably have caused a lot of people to lose money, because you can see price closed outside of this zone. Then we even moved back in and left the wick to the upside, which is some type of rejection. But then here on the next candle, we saw the huge green candle, which brought us back into the range. And this is a very typical bear trap, where price looks like it's going to move lower with very clear signs, and moves beyond the last low. And because so many traders use the last lows and highs as information, then they will enter on such a breakout, and then immediately it got reversed, and everybody who was short positioned got squeezed out of their trades. And if we know this, then it makes a new rally and a new uptrend much more likely, because everybody who is short here and has to exit has to buy, and this is then causing the uptrend to accelerate. So this is a very important piece of information, and at the same time it's important to understand that you don't try to get in the trade at the most early and the most early possible entry, but you always wait for some confirmation. And then let's say now we have with this bear trap, we probably can expect to see a move higher. So when we look back, then we have some type of we are not able to draw effective support and resistance with horizontal lines, because we don't have enough reference points that connect to each other. Probably we could have done something like this, where we connect this high, then you can see we broke it, retested it some way, then we got back to respecting this support here. But again, it's much more likely that we have some type of zone here that we can then extend further. You can see we can capture some more price action by using the zone. And then we move forward, we can see when we extend the zone that once moved back into the range and back into the zone, we saw some reaction, but then we broke it. Price was actually able to stay in the range. Then many people again would have watched the highs here. And of course, you can see a very nice reaction here at the highs. This looks like a pin bar, but obviously it has failed afterwards. and we can already see that price is making higher highs and higher lows. So you can see that after this bear trap, price moved away from this support and resistance zone. Then we started to make higher highs, higher lows even, and after this break the momentum accelerated. You can see here that this previous swing high then acted as a support and resistance going forward, and here you can see then some type of uptrend, but as it also is obvious that the trend is losing a bit of momentum, here you can see a very strong rally, and then here the waves becomes less and less strong. We just barely make higher highs, and at the tops we see a lot of reaction and rejection with the wick standing out. Then here you can even see a very strong bearish candle where price does not leave a wick at all, and it closes at the complete low of the bar, which is always a very strong bearish signal. So when we go forward, we can see then price even made an attempt to break the lows here. We saw a very precise reaction again. This is then looks like a consolidation, and if we extend our previous supply and demand area, we can see that it acted as supply and demand again. Remember, we got this from connecting the highs here, and then we saw that it's being respected on the break and then the retest. And now price made another run at it, and after it found new buyers again for a much cheaper price, then we were able to start this rally again. And we moved into the highs. Now we can probably see that if we connect the highs here, then we can get some type of trend line. And here it's important, you don't need to capture the absolute the wicks, and it does not have to be super precise as long as it explains the price action. So you can see that when we connect the swing highs here, then if we extend it further, we can see that we got some reaction here. Then obviously this would have been a very strong and important area that many people watched, because the absolute swing highs are always something that many people use for their trading. May it be stop loss orders for pending entry orders. So you can see that once price moved into the highs here with the trend line as well, then you could expect to see a lot of trading into this range, because the breakout traders are looking to enter along, and the reversal traders are trying to wait for clues that the price is not able to break it. And you can see here that the momentum is slowing. We don't have enough buying power anymore, because you can see this was a very strong rally, and then here the swings are smaller and smaller, and then even here we see that price is now accelerating the downside momentum. We see a few very large red candles, which is very different to what we saw previously here, and this definitely highlights a change in the trend dynamics. Then again, we can draw a support line here. You can see after this strong trend, we consolidated, we moved back into the lows here. After we found support, we moved back into the highs, but then on the way down we consolidated. There was a lot of selling and buying going on, but eventually price left this area very strongly. Then you can see if we extend our area, which is a very similar to what has happened here. So first of all, price moved into the area like it did here. So we tested it as support, but here price was not able to break away. We made a lower high, you can see here. And then once we broke it, we came back to retested it. What is exactly what happened here? We broke it, we come back to retested it, and then we rallied. And what happened here is just the opposite. We retested it, and then we sold off very strongly. You can see here, and interestingly enough, we have a lows around the area here. And when we extend this further, you can see we got this by drawing a rectangle around those lows. Then this also falls into it. We can probably make it a bit higher to also capture this dip. And then you can see already that here is a lot of buying interest in this area, and it's even so it is so meaningful that on this sell-off, price moved into it, and then you can see a lot of volatility, a lot of trading going on, a lot of uncertainty as well. So this makes for a very interesting area to take profits, and it's a safe bet that you can expect a lot of trading. And probably if we extend this area that we draw previously, you can also see that on the sell-off, this was an area where we then suddenly stopped for a few days. This is a daily chart, keep in mind. So as you can see here, the trading was smoothly. We got a few consolidations, but not very meaningful. And always around those key areas, you get a lot more trading, a lot of more opposition, and more volatility as well. And then once price reached this area, there was a big fight going on. You can see that we stayed in this from October until early 2015, so a few months of trading here in the sideways range. But at the same time, you can see that we had the lower lows, and price was always pushing lower, lower, lower. So you can see that probably the sellers were more interested in getting price lower. And you can see we made lower lows and lower highs. And what this means in general price analysis is that it is more likely that you can find more sellers, because the buyers are not able to push price as high anymore, but the sellers are always able to push price a little bit lower. And you can see here when we zoom in a bit that here suddenly then the selling momentum is increasing, which we have not seen before. And so this is a good sign that something is changing in the price dynamics. Here again, very nice break and retest pattern that we can always see. We can even extend our line here again. So we get this trend line by connecting the lows. Then on the breakout, we came back to retested it, got a little bit more of a reaction. Again, where did price stop? At the previous lows here, which is then a double bottom, which many people will use in their own trading, because absolute lows and highs, as we said before on our market top, is are price areas where many people will have their orders and where everybody will be watching price action. And then you can see when we extend our lines and the zones, always a lot of trading going on. You can see trend lines probably when we draw them here. Even this is zone when we extend it further. You can see a lot of trading in the zone. And yeah, and that's the very repetitive cycle, how you analyze price, how supply and demand works, trend lines, just basic highs and lows, and general concepts of technical analysis that you can use in all markets, all charts, and all time frames to understand what is going on at any point in time.